Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be reviews of the names I've covered in past videos. This week will be on Euro dollar, Sterling dollar, Kiwi dollar, gold, McDonald's, Netflix, Kiwi Swiss, and Euro Sterling. The new coverages are Aussie Swiss, Aussie Kiwi, Adobe, Microsoft, and Meta platforms. In case you don't want to know about what has happened and just want to know what is new, I have put in timestamps in the description for your convenience. The first review that I'll be covering in this video is on Euro dollar. It remains bullish, like what I've said in the video on the 11th of August. The resistance was at 1.0981. That was broken last week, and this week Euro dollar rallied to break 1.1139. I expect the following 1 to 3 weeks to be declines in the Euro dollar. There is a risk of Euro dollar reaching 1.1277 first, but there are two reasons why I think the Euro dollar will be headed lower first. Number one is because currently we can see that price action is excessively above the upper Bollinger. The upper Bollinger is currently at 110.84 and price action is at 111.89 last closed. That's reason number one. Number two, I've said that after price action completes a chart pattern, there usually is a correction before resuming the upside. So seeing how price action has rallied so much, breaking above two resistances, I highly suspect that the next move will first be lower before moving higher thereafter. Note, this symmetrical triangle has a very high textbook target at 116.21. So it will take time before Euro dollar reaches this level. Staying bullish on the Euro dollar, looking for a decline first before resuming the upside. As noted in the video on 11th of August, Sterling dollar expectedly bounced off the 20-week simple moving average to resume a bullish trend. Last week, it broke above the resistance of 1.2865, and this week it broke above two resistances, 1.3 as well as 1.3145. The next target for Sterling dollar is now at 133.58, but I suspect Sterling dollar would correct lower first before resuming the upside, because this is common. It is common to have corrections after a rally. I last touched on Kiwi dollar on the 18th of August and noted that it has a bullish potential from a double bottom. Kiwi dollar has completed this double bottom. There is now bullish confirmation via a close above the neckline at 0.6215. The textbook target is at 0.6574. Now, after pattern completions, Kiwi dollar may go further higher, but after pattern completions, usually there will be corrections first before resuming the upside. So do not expect Kiwi dollar to immediately rally to the textbook target. There are also resistances at 0.6278 as well as 0.6370 that can reject the Kiwi dollar lower when tested. This is on the daily chart. Now let me switch to the weekly chart because I've also covered Kiwi dollar in earlier videos, and I noted that Kiwi dollar is forming a symmetrical triangle. And let me just adjust the chart so they can view it. And now Kiwi dollar, I believe Kiwi dollar has completed this symmetrical triangle in a bullish direction, but of course there is no harm in waiting for another week's close above the resistance trend line just to be sure that this is not a false break like what we've seen over here in the week of the 22nd of July. Another week's close above the resistance trend line will confirm that Kiwi dollar has completed this symmetrical triangle in a bullish direction. I also covered gold in the previous video on the 18th of August. Currently, there is no change to the bullish outlook, but on the weekly chart, seeing how price action developed this week over here, I think it would be worth taking caution and avoid positioning for further upside for now. I suspect this week's candlestick, to be a doji, which is a neutral candlestick. So a neutral candlestick forming in the midst of a bullish outlook, I believe it is worth taking heed. To be clear, this does not mean that we should be bearish on gold. This means that there is a risk of a lack of upside or even a risk of decline in gold. That's the reason why I think it's best not to position for further upside and wait for further price action development. McDonald's was covered in the video on the 22nd of June, and I stated that it could complete a double top if there is a weekly close below the neckline at 246.14. McDonald's has since rallied, and with this week's close above the cloud, I believe there is a low chance that this could continue as a double top. Therefore, I will cease coverage on this name. Netflix didn't go down as I noted in the last video on the 11th of August. It has rebounded, but I'm still skeptical about further upside because this week over here, Netflix was rejected by the same resistance that I have been highlighting since the start of this coverage at 691.72. Also, we can see that price action this week is an upside exhaustion candlestick. Therefore, I still suspect Netflix will be lower going forward. Kiwi Swiss has completed its mini head and shoulders bottom and quickly entered the corrective phase. I believe the latest price action, the rally over here, to be the start of a bullish resumption phase. The textbook target is at 0.5571, but there are resistances. Let me show you where they are. At 0.5352, 0.5421, as well as 0.5474 that can repel Kiwi at Swiss's advance. In the video on the 18th of August, I said that Euro Sterling could be forming two bullish patterns. We can now eliminate the possibility of the head and shoulders bottom because Euro Sterling fell below the 0.8490 level. So after two rejections over here at the resistance trend line followed by a close this week below the 20-week simple moving average, I expect Euro Sterling to extend its decline with the next potential rebound occurring at or near the support trend line before resuming the upside. I am still thinking that Euro Sterling would eventually form and complete a falling wedge, but first there is likely a decline to the support trend line before moving higher thereafter in an attempt to break out. I'm done with the reviews for this week, and now I'll move on to new coverages. I've shown you on the 18th of August that Kiwi Swiss is forming and now completed a narrow head and shoulders bottom. So no surprise that Aussie Swiss is also forming the same bullish pattern. I believe the latest bounce of the 20-day simple moving average is a good sign that the second shoulder has likely been formed and that we can expect some upside going forward. So once there is a close above the neckline at 0.5814, there is bullish confirmation. The textbook target resulting from this head and shoulders bottom is at 0.6258. But of course, there are resistances that I will show you. They are at 0.5872, 0.6005, as well as 0.6084, all of which can reject Aussie Swiss lower when tested. And if Aussie Swiss and Kiwi Swiss are both going up, which one goes up more? The answer can be found in Aussie Kiwi. I suspect that Aussie Kiwi is forming a cup and handle top, a bearish pattern. The last two closings below the cloud confirms that there is a bearish bias and the expectation is further downside. So if Aussie Kiwi closes below the neckline at 1.0850, the bearish pattern is complete and the textbook target is at 0.545. Sorry, 1.0545. But of course, as always, there are supports at 1.0733 and 1.0663 that can bounce the Aussie Kiwi higher when tested and prevent this cross from ever reaching its textbook target. We now move on to equities. First up is on Adobe, a name that we're quite familiar with. It appears to be forming a head and shoulders bottom with a neckline at 580.50. Price action over here just bounced off the cloud support about 2 weeks back, suggesting that downside is supported and is now trading above the cloud. So there is an upside bias that is prevailing right now. A close above the neckline at 580.5 will complete this bullish pattern, and the textbook target is at 727.92. Of course, there are resistances that I'll be showing you, and they are at 634.92, 674.10, as well as a psychological resistance at 700, all of which risk of rejection is expected to increase approaching these resistances, and this can prevent Adobe from reaching its textbook target. This next one is a name that we're even more familiar with, Microsoft. This week's decline may have formed the second shoulder of the head and shoulders top, a bearish pattern. Price action is currently trading below the cloud, so there is a slight bearish bias to Microsoft, and if there is a close below the neckline at 388.06, this bearish pattern will be complete. The textbook target is at 308.92, and of course you've seen the lines that I've drawn over here. There are supports at 350.64 as well as 365.80. These are supports that can bounce Microsoft higher when tested. The last one for this video is on Meta Platforms, formerly known as Facebook. The decline in the last 2 trading days hints at receding upside bias, with price action shying away from the upper Bollinger. I believe it may have formed the second top of a double top, a bearish pattern. So downside bias will increase if Meta Platforms closes below the cloud, and this bearish pattern will be complete if Meta Platforms closes below the neckline at 442.65. The textbook target is at 343.35. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.